Bloomberg Audio Studios. Podcasts, radio, news.
I'm joined by the U.S. Treasury Secretary Scott Bessent this morning on the heels of this agreement the president announced last night. Last week, you joined me, John, and Lisa, and you said you were going to Japan for the World Expo. It wasn't really going to be focused on trade. You came back. The president had a 75-minute meeting as well last night with the trade negotiator. You were in the room, and he got this deal with you alongside him over the finish line, even though the reporting out of Washington that actually the discussions with Japan were quite difficult. What changed in the last 24 hours?
Look, Annmarie, we had some discussions about the overall U.S.-Japan relationship, which was one of the strongest in the world when I was in Tokyo and Osaka. And then we got back. There were elections on Sunday. LDP did slightly better than expected. They don't have a majority. Japanese government was ready to deal, and as only President Trump could do, he brought the Japanese trade delegation into the Oval and had a very fulsome negotiation with them. And I tell you, they're tough negotiators, but President Trump's tougher.
Well, there is a photo circulating on Twitter from Dan Scavino, and you actually see a Sharpie X out of some what looks like preliminary deals for even more concessions with Japan. I want to ask you about this 15% tariff rate. Is that the new floor now for trading partners when you're going into these negotiations?
Well, I think it's very important to know that 15% for Japan for reciprocal tariffs for autos. That is a different kind of deal, but because the Japanese proposed a very innovative solution. We've been working with them for months, the trade team, myself, Ambassador Greer, Secretary Lutnick, and they came to us with the idea of a Japan-U.S. partnership where they are going to provide equity, credit guarantees, and funding for major projects in the U.S. So they got the 15% rate because they were willing to provide this innovative financing mechanism.
There's a lot of Japanese FDI into the United States already. Is this new capital?
Oh, no, this is all new capital. This is all new capital, and it is going to be targeted at the strategic industries the President Trump and this administration believe that we have to de-risk on. During COVID, we saw our vulnerabilities, whether it was in medicines, semiconductors. So we are going all in over the next few years to de-risk our supply chains. And this deal, thanks to President Trump, is going to be part of that.
When it comes to the 15% rate on autos, this means that Toyota is basically paying a cheaper rate than, say, GM if they have inputs from other countries. They're still at the 25% auto rate. Do you see the auto rate leveling out to something lower than 25%?
We'll have to see. And again, those are just GM components. There's also the USMCA, the portion of any autos assembled in the U.S. And then, of course, GM and especially Ford. I think Ford has the largest U.S. production. You build it in the U.S., there are no tariffs.
So when it comes to what's next, we know the EU negotiators are in town. This 15% rate feels like potentially a floor. Could anyone get below 15%? Is the European Union still trying for a 10% minimum baseline tariff?
Well, again, the 15% is a result of this very innovative package that the Japanese came with, and President Trump being able to push them to do even more. So,
has Brussels come up with anything innovative?
Not yet, but again, talks are going better than they had been. I think that we are making good progress with the EU, but as I've said before, Annmarie, the EU has a collective action problem. 27 countries. Great thing about dealing with the Japanese, I've been going to Japan since 1990. I think this weekend was my 52nd trip. And the Japanese government moves as one entity. They're highly organized across all levels of government.
So you say the talks are going better. We just have a story hitting the terminal this morning from our colleagues in Europe that the European Union Ukraine is readying $100 billion euros if there is no deal in place. They will impose 30% tariffs on those 100 billion euros worth of goods. Do you think we're going to get to that place?
I think it's a negotiating tactic, and it's what I would do if I were in their place. But Annmarie, remember, we are the deficit nation. They're the surplus nation. So any kind of a escalation in trade problems will always hit them worse.
I want to also talk to you about what's going on with China. You're going to Stockholm Monday, Tuesday to meet with your Chinese counterparts. Are we going to continuously see the discussions revolve around rare earths and export controls, or are there going to be other items on the table?
I think we're in a very good place with China now, and we can start moving on to bigger discussions. As I've said many times, there is the potential for a big, beautiful rebalancing between the U.S. and China. President Trump is committed to bringing back precision manufacturing to the U.S., and as we become more of a manufacturing economy, China is highly imbalanced. They account for 30% of all the manufacturing output in the world. That's not sustainable. We believe they should become more of a consumption economy. If they are willing to go down that route, then we could actually do it together. And then there are lots of other things we can talk about, whether it's them buying sanctioned Russian or Iranian oil, a number of security things. And so
What about the purchasing agreement from Trump's first administration? He had a deal with China, the Phase 1 purchasing agreement on agriculture.
Well, again, that's another way that we could bring this imbalanced relationship into balance. So we will be talking about purchasing agreements, especially ag. So, and to refresh everyone's memory, we had the purchase agreements. The Chinese lived up to the purchase agreements during President Trump's final year in office, and then the Biden administration didn't enforce those purchase agreements. So, we're going to let bygones be bygones. We're going to look forward, and I think we can come up with some very interesting purchasing agreements. As you know, President Trump is committed to the American farmers.
Well, looking forward, you told me, John and Lisa, last week, the market doesn't need to worry about August 12th. That's the deadline for this current détente between Washington and Beijing. What's the new deadline going to be?
Well, again, I think that we could roll it forward, maybe in a 90-day increment. And I think the good news here is that we are back on track with the Chinese negotiations. On April 2nd, President Trump told countries, here's your reciprocal rate, but that was the ceiling. If you do not escalate, if you don't escalate, this is the max. The Chinese chose to escalate, but now both sides have de-escalated, and I think we can get into a very good cadence of regular meetings with them. And look, we're the two largest economies in the world. We do not want to decouple with the Chinese. We just need to de-risk part of our supply chain.
Does regular incremental meetings include a meeting between President Trump and Xi Jinping this fall?
I do know that Party Chair Xi has invited President Trump to visit China. I don't know. I don't have dates on that. I don't know if the president's accepted. I know they have a fantastic relationship on a personal level, which I think forms the basis of everything between the U.S. and China.
Local reports in China were talking about the two meeting on the sidelines of the APEC summit in South Korea this fall. It's end of October, early November, or maybe President Trump going to China first. Could we see a meeting that soon? You think a meeting within this year can happen?
Again, I'm not privy to the president's travel schedule beyond September, so we'll see.
And nothing before a meeting with Xi Jinping before September?
Nothing before Labor Day.
So in the last week, I do want to go through something that's going on with China. They've imposed exit bans on a Wells Fargo banker, a Commerce Department employee, and according to Microsoft, they hacked into their software. Will you address these actions at the talks in Stockholm?
We're going to address a whole host of things, and obviously things like that will be on the agenda with my Chinese counterpart.
You had said to me last week that the NVIDIA H20 chip was potentially a chip in negotiations, a mosaic, part of the deal. Do you think China's doing this for leverage at the trade table?
Absolutely not. Absolutely not. Because, again, the H20, while it is an advanced chip, is not one of the most advanced chip. I think if we were to think about the NVIDIA stack, the HP would be something fourth, fifth down the stack. And my understanding is that Huawei can produce something with similar efficacy.
But China's malicious behavior, even just in the past week, even targeting a Commerce Department employee, do you think they're doing this to have leverage with the United States?
Well, I can tell you, in Stockholm, it's not going to give them any leverage with me. And it's a big, sprawling bureaucracy. And sometimes I think we may see the arrest may have been in a province. The central government may not be aware of it. So, I would highly doubt that something at that level, that they have wanted to engage with the U.S. We are engaging with them, and I think both sides want to move forward in a productive way.
But you'll raise these issues?
Yes.
So now that the administration is getting trade deals across the finish line, Japan, Indonesia, Philippines, yesterday you said the European Union potentially in sight, do you think the Federal Reserve is going to have enough clarity by September to cut interest rates?
Again, I'm not really sure what the Federal Reserve is looking at, because thus far we have not seen, or we've seen very little, if any, price pressures from the tariffs. And if we were to see those, they wouldn't be inflationary, it'd be a one-time price adjustment. So I think that their analysis of tariffs is a bit off.
Well, Governor Waller made this exact case to us on surveillance on Friday, and it sounds like he might dissent at this meeting. He also said the president hasn't called him yet. He's one of these names that are circulating around. Could he replace Fed Chair Jay Powell? Is he a name you're looking at? Have you reached out to him?
I think there are a lot of strong candidates, including several who are on the main board and perhaps regional bank presidents.
So are there other names outside of Kevin Hassett, Kevin Warsh, Christopher Waller, and you yourself has been circulating?
There's a long list, and like I said, there's some great candidates.
And have you reached out to everyone on both those lists?
I'm not going to talk about the process, but we are getting the process underway. Obviously, it's going to be President Trump's decision, and we're not in a rush.
So, you're not in a rush, but the president continuously says he wants to get rid of the Fed Chair Jay Powell. Mohamed El-Erian yesterday said he should resign.
Well,
do you think Jay Powell should step down to protect the institution?
Couple of things. One, the president said he is not going to fire Chair Powell. I was somewhat surprised that Mohamed El-Erian came out and said that. And what I've come out and said is that I believe that it would do Chair Powell a favor, and he would be doing the institution a favor if he did an internal review, separate monetary policy from everything else, and this is something that Larry Summers and I agree on, is this mission creep from the Fed is endangering their independence of monetary policy. So all these other things that they're engaging in could threaten monetary policy. So it is a big, sprawling institution. The central budget for the board is up 4x since 2004, and every institution needs to examine themselves.
But you want the man that you guys don't think is doing a good job to run that review?
What's that?
But you want the man, Jay Powell, which you and the president don't think is doing a very good job, to run the review of the institution?
Well, I think that it could be a committee. It could be a group. They could invite outside experts in. The Bank of England, after the 2022 rate hike shock, went back and did a very good examination of what went wrong with monetary policy that brought in outside experts. So, I think an internal review would be a good start. And if the internal review didn't look like it was serious, then maybe they could be an external review.
Have you communicated this directly with Jay Powell? Do you guys continuously have your once a week breakfast, lunches, either at the Fed or the Treasury?
I gave a speech on Monday night on bank deregulation, bank regulation, the future of regulation, which is, aside from monetary policy, I think the most important thing for the economy. The Fed is one of three regulators. There's the Fed, the Office of Control of the Currency, which sits under Treasury, and the FDIC. And I believe that all three of those should have important voices, and I believe that the regulation has been much too stringent since the great financial crisis. We are seeing this big buildup outside the regulated financial system. I think I saw something 2 days ago, the private credit is up 10x. I'm not saying it's a financial stability problem, but I am saying that there's a regulatory arbitrage going on. But that was a long way of saying I saw Chair Powell at that speech.
And your lunches and breakfasts continue?
Always.
So you have a good relationship with him at the moment?
We have continuing communication.
Last time you were on, you also talked about the potential next Fed chair. You said his or her nomination. Is Governor Bowman also in the running?
Again, I'm not going to name names, but they're good candidates. As I said, on the board, there's several female regional bank presidents, and then there are some fantastic women outside the Fed.
There's also Governor Kugler's chair that is open in January. Have you started that process?
It's a simultaneous process. The Kugler chair is a 14-year seat. So we'll be looking at that also. And again, I think we have some very good candidates.
Given you just saw Jay Powell, has he yet to tell you whether or not he is going to leave the board, his governor seat, before 2028?
He hasn't yet. My belief is that he will, and I think that it would be very good for the institution for him to do it, and I think it'd be very good for him personally to do it.
The president once said that he goes out and riles financial markets, and then he sends you, his Treasury Secretary, out to calm things. Things are pretty calm today. But when it comes to the Fed chair, I know you love college basketball, and you talk about the president being Bobby Knight, and I know you love Dean Smith. Are you guys playing this good cop, bad cop when it comes to talking about the Fed, talking about Jay Powell?
Not at all. Annmarie, the reason I think that I'm, to the extent I'm able to calm the markets, and that doesn't always happen. I was in the investment business for 35, 40 years, but I think more importantly than that, I understand what President Trump is doing. And a lot of times he's 1, 2, 3 steps ahead of the market. And as you know better than anyone, the market wants instant explanations. They want clarity. They want immediate gratification. So I think that I'm able to, as a former practitioner, I think about when President Trump tells me what his goals are, I think about what is the best way for me to give good framing to market participants, for them to understand what he's doing, because he always has a plan. It's not always obvious.
So you are communicating almost the strategic ambiguity that he likes to operate from.
Well, and I'm also trying to explain that there is a plan, because look, these letters went out. Everyone was, oh my gosh, these are high rates. And I think the president created maximum negotiating leverage, and the market actually took it pretty well. Took it pretty well.
Just to finish on that final point then, do you think he's more emboldened to go for higher rates with trading partners now, given the market is not pushing back?
Well, I think he's created a lot of leverage because he's created an A-B situation. he is able to go to the trading partners and say, look, I am happy to take in this tariff income if you don't want to negotiate. This is a high rate, but the U.S. is taking in massive amounts of tariff income. We had the first June budget surplus since 2015 last month. We reported it this month, and so we are taking in substantial income. So President Trump is creating this leverage by saying, if you don't want to negotiate with me, I've sent you a letter with a high rate. Have at the high rate, or come and negotiate in better fashion. Because I'll tell you, what was fascinating for me, and this was President Trump at his best, was the Indonesians came with what I thought was a very good offer out of the blocks. President Trump kept pushing them. He raised the reciprocal rate when he sent them the letter, and 5 iterations later, the Indonesian trade deal was greatly improved, turned into a great deal for both sides.
Secretary Scott Bessent, thank you so much for your time this morning.